Okay, Recons video on Sunday, the 9th of October 2022. It's just gone 2:25 a.m. Chicago time. Do hope you are doing well. So this is our weekend futures market recap video, where I go through 15 of the largest futures markets and I show you what I am seeing on my charts. And we're going to spend a little bit of time talking about the Emini charts first, and then we'll roll through each of the other futures markets. So, daily chart of the Emini first. We are back down at these important levels, BT hat levels, that we were seeing last weekend. So BT hat stands for big things happen at triples. And with triples, we either get kind of areas of support and resistance that hold, and we have kind of big trend moves bouncing off them, or the support and resistance levels don't hold, we could break through them, and we go into big trends as we break through those levels. And you can see here on the daily chart of the E-mini, this is day session only. This is this week's activity. Last week's activity, we were again holding at these levels, and I was saying two things, that we potentially could get this support kind of coming in because we've overshot support on the lowest time frame, and we're looking for support on the next highest time frame, the intermediate time frame that comes in. That had already come in on some of the other index that I'd look at, the ETF charts, the futures charts, or the index themselves on either the S&P 500, Dow, Russell, or NASDAQ. And we'd had that support level kind of come in, but it not come in yet on the E-mini. So this week it did come in, and we bounced from there, and we've come back down to look at those levels. So last weekend we were sitting at these critical levels, and I'm saying there's one of two things going to happen. We're either going to get a severe kind of breakdown Sunday into Monday and the thing just kind of gives way, or we're going to bounce back, and then the professionals will use that bounce back in order to drive the market back down. And that second scenario is what we got this week. Those levels held, we found that support, we bounced back, but the professionals kind of came in as soon as we had, I think, the employment numbers come out this week, bang, they hit it down hard, and we're now at triple levels here with supports on all three different time frames. So that's the picture in terms of support and resistance and what's happening on better sine wave. And when we look at better momentum, this is where we're trying to find out, is this level going to hold? And what we look for on the volume side of the equation is two things. First of all, blue professional bars kind of coming at the lows, and those exhaustion patterns that have been followed by bullish divergence patterns. So we've kind of found a maximum. Down at the bottom we're finding some support. Well, first of all, we got blue professional bars kind of selling it down at the top of this range here through 3900, and then maybe picking it up at 3700. We need to go down through the time frames in order to understand exactly what the professionals are doing at these levels. But they definitely got in on this retrace at this point here, and they've come back down. The one thing that we've not seen on the downside here is exhaustion volume. We need that to kind of mirror the type of patterns that we see at highs to be mirrored on the downside when we see them at the lows. And as I said last week, we were just sitting around this kind of neutral level in better momentum, and we're still not breaking out to some kind of extreme pattern here, and we're sitting at these lows. So a little bit of bullish divergence kind of come in at these levels here, but we haven't seen an exhaustion pattern followed by a first bullish divergence pattern. So that's on the daily chart, what is happening. Let's go down to the 15-minute chart and kind of look through it in a little bit more detail. What was interesting, I talk about Rambo patterns, Rambo channels, and how the amateurs kind of get wrong-footed at kind of different stages of the trend. And we just had with Thursdays and Fridays activity kind of down here, Rambo patterns come in a whole family down at these lows, and they mirror the Rambo patterns that we had here. So at this break, the amateurs driving the activity, little Rambo patterns there. Can I show you those? Yep, there we go, a whole little family of them. We've talked about that before. Bang, 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 kind of driving the move. And so they get wrong-footed, highs just goes above those, and as soon as we're through the lows of that little kind of congestion area where the Rambo patterns were active, bang, we're into a downtrend. And we had not seen exhaustion sell on the downside until this kind of activity Thursday, Friday. These kind of levels, we had exhaustion buying, kind of short covering rallies at these points that fail, bang, and then we keep on driving through. So one bit of good news in terms of kind of finding the lows here is on the 15-minute chart. At least we got Rambo patterns at these extremes, and we've got exhaustion sell bullish divergence starting to come in with fairly decent levels. You know, it's not as high as this kind of short covering rally, down here at minus 30. It's not down here at these kind of levels for almost kind of 45, 50 up at these highs. So it's a decent read, but is that enough to end it? I don't think so, because when we look on the 15-minute chart, when we come to the sine wave patterns here, yep, we're making pullback to end of trend, and that support will come in on the highest time frame when these two lines cross. But we are through supports on the low and intermediate time frame, and these need to make pullback to end of trend on the way down. So they need to make those patterns, and we've got to do all of that within the next 50 points on the downside on the E-mini. These levels need to hold. So on the 15-minute chart, possibly something kind of happening here, but we haven't seen the price move make an extreme kind of pullback to end of trend pattern. So we're still in the downtrend on the 15-minute chart, and we've got to do those things on the downside. 45-minute chart, let's go back to this, and here you can see we're nowhere close to those kind of extreme exhaustion patterns. Those are the Rambo patterns on the 45-minute chart, marking those highs. We've not seen Rambo patterns down here on the 45-minute chart, like the 15-minute chart. And the extreme levels that we had kind of getting the move going down here were kind of 60,000 prints on better momentum, and we're only at 22 here, and we're sitting at that critical low. Here we're making pullback to end of trend, and we're starting to ripple through the time frames. So you can see on the lowest time frame, pullback to end of trend. On the intermediate time frame, we're putting in pullback to end of trend when these two lines cross. But the energy on the highest time frame here, we're coming up to make a cross, and we're going to have that energy swoop down and take us into a pullback to end of trend move on the 45-minute chart. So that has to play itself out. So I don't think these levels are going to hold at 3650, 3600 here because of that. That energy's got to come in and make that pullback to end of trend on the highest time frame. And then the 135-minute chart here, again, exhaustion patterns here. Getting the move going. We're at neutral, we're at positive 4 on the 135-minute chart here, and so we've not seen an exhaustion pattern here, and we're putting in pullback to end of trend on the lowest time frame, but we're below support on the intermediate time frame. So depends if this support holds. Potentially we don't need to put in the pullback to end of trend on the intermediate time frame here. But that's not good enough to hold these lows. Yes, blue professional bars at the lows there, but we haven't seen those kind of extreme exhaustion patterns and bullish divergence. The only chart that shows kind of an exhaustion pattern is the at ES daily chart, so day and night session. If you want to pull that up on your charts, you'll see that there's an exhaustion pattern there, but it doesn't figure on the day sessions only. So BT Hap. Big things happen at triples, and this week, so we held at the beginning of the week, and came back up. Bad news, or it was read as bad news in terms of the employment numbers, and we're back down at those levels. So if it doesn't hold Sunday, Monday, we're going down, and until we see an exhaustion pattern on the downside on the 135-minute chart, this downtrend is not over. So let's have a look at the tip bar charts and the 13,500 E-mini chart first of all. So the yellow vertical lines mark the beginning and the end of the week. So last weekend we were sitting at these critical levels, 3600 level, and it was a question of whether we were going to kind of fall through there and go for a massive decline Sunday, Monday, or they were going to hold and we were going to have a bounce and come back up. Well, we had a little bit of weakness down, I don't know, it was about 20-30 points on the open on Sunday, and then it held, bang, and we got our triple signals kind of coming Sunday into Monday, and we had that huge couple of rally days into these highs back up to 3800 here. So we had a nice triple signal there, kind of marking that low, and we go into these highs with exhaustion buy, bearish divergence, flush, flush, flush. We get a couple of triple signals, bang, and we're back down again. So that was a nice move for the second half of the week, the first half of the week and the second half of the week. A little bit of junk as we sat through there, but as soon as the employment numbers kind of came out, bang, we're down. Now, have we done enough damage on the downside? Don't think so. The exhaustion patterns here are getting the move going, and these signals, bullish divergence, flush, flush, are playing off those two. So we've not seen an exhaustion pattern on the downside, so we're still, but we're oversold at the moment. We might have a little bit of a bounce and then come back down, but that was what was happening on the E-mini. I didn't trade the E-mini this week. I traded crude and euro. So let me show you that on the crude chart. So this was the end of last week on crude, and we'd had all our triple signals kind of go off, and I talked about a stair-step trade on crude on last weekend's video. And as soon as the market opened on Sunday, I was in at 82 on crude because of that. So we've had our triple signals go off and we start to rally. We have a little bit of a decline kind of coming into here. No blue professional bars at the highs taking profits, but as soon as the decline kind of sets in, nice lot of volume kind of taken out of the market with an exhaustion sell pattern there, and there's the blue professional bar kind of step in, and it stair steps our trailing stop in better pro-am up, bang. So that was the reason to get in there. Then I was out at 86 when all the blue professional bars kind of came in here and took profits initially. We had some signals here, but there wasn't enough damage on the downside. The triple signals there were based off that exhaustion buy pattern, and that's actually getting this part of the move going. So those were not good patterns to get short, and in fact we rallied through to 92 at the end of the week, and there we're starting to see exhaustion buy, bearish divergence and blue professional bars. So that exhaustion pattern is mirroring this one. That's getting the move going, that's ending the move. All the volume that was getting long here is getting out on those kind of extreme levels. So we expect some weakness in crude when this kind of sets up. I don't think it's going to be a big move down, but it's just going to be some profit taking and some kind of junky moves. The big trend move in crude happened this week, so we got some of that, which was good, 82 to 86, which was nice. And then natural gas not doing the same thing. We're actually got breakdowns in natural gas, trying to hold last week in natural gas, but the exhaustion patterns that these signals are playing off are kind of getting the move going here. And what we've seen on the downside is a little bit of retracement and a bit of short covering rallies with those exhaustion patterns, and we're back down to short signals on natural gas. So natural gas is looking weak there. While we're at it, let's just look at copper. Copper here, yep, nice signals last week, little bit of a junky kind of rally to the highs. No signals this week. Not really a top at these 355 levels with blue professional bars at the highs or exhaustion buys up there, but significant weakness after we hit those kind of levels. But copper not particularly interesting. But let's look at the forex charts here. So we've got the euro first of all, and this is why I got short into the euro midweek. Got out of crude, got short into euro. So last week we had signals in the euro to go long, which is nice. We kind of sat around the 98.5 level for a bit, and then we went for another rally. But then all these blue professional bars come in just above parity. Exhaustion buy, bearish divergence. We're overbought on the background is grey, and we break the trailing stop here. Whole bunch of blue professional bars kind of getting out at that point, and there's our exhaustion patterns kind of getting the move going. We get a triple signal, go short there at that point. Nice little retrace with some signs of weakness at this point, bang bang bang, and we're down. So holding a short euro trade over the weekend. No blue professional bars at the lows, no exhaustion sell kind of going on here. So the euro is heading down, and so people are scared, and they're kind of piling into dollar, US dollar, because of that, and so the forex contracts kind of headed down. So we'll have to watch out for the forex contracts, because if you remember 07, 08, the big surprise there was that the US dollar initially strengthened, but then it weakened, and everybody kind of piled into particularly the euro and I think the yen at that time, because we had kind of margin calls and carry trades kind of being reversed, and the difference was that the euro had become a carry trade currency, just like the Japanese yen had, and we had huge spikes in the euro because of that. So at the moment we're heading down the euro, but if the crisis that potentially is kind of unfolding is seen in the euro, it'll cause kind of repatriation of funds to cover kind of losses in the eurozone. So let's watch out and see if the euro decline kind of keeps on and reaches some kind of extreme and then kind of goes the other way. I'm just kind of wary of that. British pound, yep, weak, but because the Bank of England is kind of starting to move against all the other central banks, it's looking a little bit stronger than the rest of the currencies. So we had signals last week, long 107, which looked counterintuitive because the mainstream media was saying, it's the end of the British pound, blah, blah, blah. But in fact, what happened was the Bank of England kind of reversed course. And so we had signals kind of long British pound, topped out at 115. It's unbelievable. The move in the British pound was like from 104 down to 115, so like just an extraordinary move. Exhaustion buy, bearish divergence, flush patterns up here, and then we kind of signaled down. But at these levels at 111, the professionals seem to be kind of coming back in. So the pound is a little bit stronger than the euro because the Bank of England has basically changed course before any of the other central banks have. And then Aussie Dollar continuing to weaken down at 63. Tried to hold down here with long signals on the overbought, oversold system last week, but we didn't really have a lot of blue professional bars down here at these lows. We had some here, but they're not really at the lows with that extreme pattern there, and that didn't catch it and so on. So we're still weak on the Aussie dollar. And Japanese yen, well, I don't know if my data is right on the Japanese yen, because this is what happened during the employment number release, and that's just an extreme kind of move in the Japanese yen. I should really kind of refresh my tick data on that to see if that's actually real or not. But anyway, it's not good for the Japanese yen. We've got the central bank intervening in the Japanese yen, and so I wouldn't particularly think it's kind of tradable, because you just don't know what the central bank's going to do. Are they going to step in and hold certain levels? So we've got triple signals kind of short at the moment in the Japanese yen, but this week the most important markets are the E-mini and the euro. We don't need to be worrying about any of the other kind of contracts. We need to get those two markets right. Let's look at gold and silver, precious metals. So again, last week we had nice signals kind of down here, triple signals kind of go off, and we go for a nice rally. So I don't think it's all over for gold because we didn't see blue professional bars at the highs here above 1700, and we'd come back down with these blue professional bars on Thursday, Friday into the area where the professionals kind of took off, like a gathering pattern here. After the low had been made, they kind of drove it forward with this move, held and drove it forward again. And we've not had exhaustion at the highs, blue professional bars at the highs. So we've had some nice moves in gold, but I don't think it's over for gold. Silver, 2 weeks ago, I was talking about the average trade size in silver was absolutely massive as we were coming down into these lows, and $18 kind of held. We had triple signals here on one side of this kind of decline and on the other side of the decline, and we kind of got going into these highs. No exhaustion buy at the moment. These patterns kind of forcing it down at the moment, trying to hold down here. So silver still in an uptrend, but we'll have to wait and see for the blue professional bars to kind of step in. Bitcoin up and down and up and down. So this week's activity, as I said, the 4500 tip-hour chart is probably too small of a chart here because there's so much activity kind of going on in Bitcoin. But this week we had signals long at the bottom down here, beginning of the week, and then with signals short up here. Spent a lot of time kind of fussing around, and then we got the decline at 20,000. Blue professional bars kind of come in here and just sell it down super hard, and we're down here at 19. No blue professional bars at the lows though, so Bitcoin still kind of weak at the moment. And then corn, the ags, really nothing going on. Last week we did had kind of long signals here, super junky at the moment, and we're kind of, well, we're trying to hold. There's blue professional bars, exhaustion, sell, bullish divergence kind of come in at these levels, kind of down here. But why would you be trading, the ags at the moment when there's so much kind of going on in forex and equities? Soybeans, they drove it down here, stair-step trade, bang. No blue professional bars at the lows on soybeans, so that's still weak. And wheat, we had signals here a couple of weeks ago. We kind of rallied back up to 944s, and then we kind of selling it down. We're in a downtrend here, but no exhaustion sell on the downside, but blue professional bars kind of come in here. Again, not interested in these until we get these two right. What am I missing? Bonds. 10 years. So this is this week's activity where we kind of maxed out. We had a triple signal here, bang, we kind of sold off. So they held it at this level at the beginning of the week. So we had a rally. Blue professional bars kind of come in here and they push it back up and they kind of sell it down here. Yes, exhaustion patterns, exhaustion buy, bearish divergence, but no blue professional bars at the highs. They just kind of sold it down at this point, and I suppose that was the employment numbers that kind of brought that activity out. Exhaustion, sell, bullish divergence, some blue professional buyers here, oversold. I wonder if we're going to get a long signal in bonds, and that might be kind of a flight to safety if equities kind of just falls off below the 3600 level on Sunday, Monday. So it's going to be, just like I said last week, it's going to be interesting to see what happens at these levels. We've tested it once and we bounced off 3600 last week, and we're back down at 3600 here, sitting on a BT hat. Big things happen at triples. So this week I think all the action is going to be in the E-mini and the euros, maybe bonds as well, and not going to worry about any of the other kind of smaller markets. Just need to get the big picture right as we're sitting at these kind of critical levels at 3600. Anyway, hope your weekend is going well, and good luck with your trading next week.